Truly inspirational pictures, but let's get back to ground reality and something which impacts all of us. For 6 straight months, inflation has remained above RBI's upper tolerance band. June retail inflation marginally eased to 7.1% from 7.04% in May. Overall, food inflation stands at 7.75%. Sequentially, the headline inflation slowed to 0.52% from 0.94% in May. The core inflation, including food and fuel segments, came in at 6% in June. The overall food inflation came in at 7.75% as compared to 7.97% in the preceding month. The inflation rate for vegetables went up by 17.37% in June. Fuel and light inflation climbed up to 10.39% in the month of June, in contrast to 9.54% in May. Remember, the government had reduced excise duty on petrol and diesel and imposed some restrictions on food exports, the effects of which can now be seen with inflation easing slightly.
Well, today we got two macroeconomic numbers. One, we got the CPI, that is the consumer price inflation for the month of June, which came in at 7.01. And we also got the index of industrial production for the month of May, which came in at 19.6. Now, both these numbers are more or less within estimates, and that is the good news. As far as inflation is concerned, in fact, inflation news has grossly overtaken industrial production news, so I'll focus on inflation. The good news, as I said, it's come more or less within what market was expecting. The second piece of good news is that it's marginally lower than what we saw in the previous month. The not so good news is that the third consecutive month when we're seeing inflation over 7%, it is the sixth consecutive month where we're seeing inflation over that 6% band, which is the upper tolerance level for the Reserve Bank of India's inflation target of 2 to 6%. So clearly we're not out of the woods. We'll have to see what the US Fed does when we get the US inflation data tomorrow. And based on that, the Fed is likely to raise their own interest rates by 75 basis points, and that's going to lead to some more outflow. In fact, it's going to aggravate the outflow of dollars from India. And what does that mean for us? It means further rupee depreciation. So whatever correction we see on the oil front, that might be offset by the depreciation in the Indian rupee, and that is going to impact especially imported inflation. So we're clearly not out of the woods. But as of now, I think we have reason, if not to celebrate, to be cautiously optimistic, because the first quarter number for inflation has come in lower than the RBI's own estimate of 7.5. But going forward, I think it's going to be an uphill battle. We'll have to see what our own Reserve Bank of India does in the first week of August.
Let me go across to Madhavi Arora, lead economist at Emkay Global, to break down those numbers and look at the finer print on inflation. Madhavi, hi, great to have you on the show. Now, should we take heart with a core inflation number at 6%? Do you think there's a glimmer of hope there?
So it's largely stable, to be very sure. And a large part of the core inflation correction has essentially come from transport and communication component. And to be very fair, only the transport component in that, which essentially was led by, the sharp excise cut, duty cut we saw in motor fuels. So, to that extent, everything else apart from that particular component actually has grown sequentially. So I think the correction that you've seen in core in terms of momentum, because in terms of year-on-year numbers, it's largely stable. It was largely the momentum which had sort of collapsed, and that may not sustain going ahead. At this point in time, we are still seeing near resilient demand in the economy. It has not been hit very badly. Now, my sense is that there could be still a lagged pass-through of high commodity prices that could be visible in the coming months or so. So we'll have to see, whether the so-called correction in core inflation, which is a reflection of, say, domestic intrinsic demand, would actually show up in a negative fashion. But my sense is coming months will again see the momentum going up as far as the core inflation is concerned. At the same time, I think the peak is pretty much there, both for core and headline inflation. If you look at the headline component as well, there was a very mixed behavior that we saw in food inflation this time around, especially mandi prices, which now are even showing a further fall in vegetable prices for the month ahead.
I was going to come to you on the vegetable inflation number at 17.37%. Isn't that a continuing concern, Madhavi?
So, see, there's a lot of base effect that essentially is playing around. That's why it's better to see the momentum, which is a month-on-month movement in vegetable prices. So, this month, in the month of June, we saw vegetable prices largely either moving sideways or falling sequentially. For the month of July until 12th of July, that is today, the mandi prices are again indicating largely a fall in vegetable prices on a month-on-month basis. This could again be offset by, probably increase seen in meat, eggs, and other processed food cost. That essentially could sort of, offset a part of the fall in vegetable prices. But I think on a sequential basis, you may see vegetable prices going down only. Of course, there could be some bit of a pressure with regard to perishables because of the rains. But I think on a net basis, you should see some kind of a correction in mandi prices,
So,
which again should help bring down food inflation.
the hope has been that inflation will start easing in the second half. Do you share that optimism, or are we going to be stuck with this 7% sort of range for some time now?
Then I think we are pretty much past the peak as far as inflation is concerned. As Maithili was mentioning, that RBI had actually missed its inflation, forecast by 20 bips. The first quarter FY23 inflation is actually 20 bips lower than RBI. Our own estimate for the coming month is tracking July inflation at around 6.7, 6.8%, and the second quarter of this year at around 7% or 7.1%, which is again around 30 bips lower than RBI's own estimate. So I think to some extent RBI could be surprised on the on the downside as far as inflation is concerned, which should be a good news. But I doubt it would derail RBI's front loading as far as tightening is concerned.
So maybe some pleasant surprise there for the RBI next time round.
Yes.
Thank you so much, Madhavi Arora.
Yeah.
Now.